So firstly, my name is Deon Rebello and I'm a CEO of DCX Bullion. We're very privileged today to have on our first official DCX podcast, our chairman, Gerard Kemp. And, we've decided as a company that we want to start investing more time and energy into social media because, firstly, for me, information is power. And a lot of where we are in the world right now, the uncertainty and everything that's happening in the world, people don't have enough right information to make informed decisions. And we as a business have spent a lot of time and energy making sure the information we get out there is reliable, it's backed by good data, and can actually allow people to make informed decisions. We've got a country where the rand has continually declined to the dollar over the last 2 decades, and we don't foresee it stopping. We foresee it going beyond 20 and at some stage even beyond 30. We are in the midst of a sovereign default, or the beginnings of one, with the grey listing that we had last year, and I know that there's been a lot of institutional movement locally where they're trying to reform to make sure we can overcome this grey listing, but it's kind of a step. So at the end of the day, DCX Bullion is about, as I said, informing the person in the street to make informed decisions about their wealth. We're about generational wealth. We're about making sure that your money or your wealth grows in the long term. And, our meeting was through when I originally started DCX. I started to realize I needed to surround myself with key individuals that had that knowledge and had that information. And you were one of the first people that I was introduced to, and our relationship spurred from that. I then asked you to join my board, so we constituted a board, and then I asked you to be our chairman. So good afternoon, Gerard. How are you?
Good afternoon, Deon. Delighted to be here, and thanks for the invite, and thanks for the opportunity to say my piece. I'm a gold bull. I've been born into a family of gold miners many moons ago. Grew up in a gold mine house. My father was a shift boss on the mines. And when I finished school and military training, I didn't want to go and study full time. Maybe one, because of my girlfriend, and two, because I didn't like going to varsity, didn't like studying so much. So because my dad worked in the mines, I got a job in the mine. Those days it was quite easy. And I started in the Free State, and President Brand, the gold mine was an Anglo-American gold mine. And I actually, although I grew up in a mining town, I didn't really know what happens in a gold mine. So after the personnel interviewed me, and they said, well, they've got this vacancy. I said, that sounds fine. How much do you pay? So immediately I discovered I could actually afford a car. And that was very important. When you're 18 years old, you just come out of the army, you want to, you want to enjoy life and have a girlfriend and whatever. So that was my foray into the gold industry. I must say, at that time, we just came out of $72 to the gold, and the gold price was fixed to the dollar, as you know.
Yeah.
And my first year at President Brand Gold Mine, we got 3 increases because the gold price was then decoupled from the dollar and it started going up. Unfortunately, fortunately those days, the rand was $1.2 to the rand.
Yeah.
So we didn't have the benefit of a weak rand then for the gold industry. So cost was still high, but labor was very cheap.
Yeah.
Anyway, it's a long story, but I went almost from strength to strength and started really enjoying working on the mines, not so much underground. I did work underground for 4 years every day of my life, but that motivated me to study, to get out of the mine.
Absolutely.
And Anglo-American was a great sponsor and started sending me to facilities where I could further myself, like Wits University, and finally ended up with a master's degree in mining engineering. And I also was a qualified mine surveyor. I did a diploma in labor relations, and I also did the management development program at UNISA. So I was well educated, well trained by Anglo-American.
Yes.
But in '95, after 2 years in the gold industry, I discovered there's a world out there. And I was offered a job by a stockbroker who became BOE Securities. It's just then when BOE started banks started buying stockbrokers.
Yeah.
And we were part of a global expansion of banks into stockbrokers. And I became a gold analyst. I had no idea what a gold analyst did, but I thought I was going to go and test gold particles or whatever. So I became a gold market analyst, which was the right description, and ended up analyzing 52 gold mines in South Africa. There were 52 listed gold mines in South Africa. Today, there's a handful.
Yeah.
At that stage, South Africa were producing 600 tons of gold, and today we battle to get to 100 tons of gold.
Well, I don't even think we're in the top 5.
Definitely not.
Yeah.
You know, at those days, South Africa was most definitely at the top. And I think America was second and Australia was third. And I remember being at a conference in Australia in 1998, and this one person, and I can't remember who he was, but he had the audacity to say that soon Australia will bypass South African gold production, not knowing how much shallow gold was really in Australia. Well, it didn't take long and they surpassed us. However, South Africa continued to produce gold still and will be. You know, a lot of those mines we thought would be closed and long gone continue to mine today because of the weak rand.
Yeah.
If it was not for the weak rand, we couldn't afford. The cost would be just too high. But at a rand gold price today of R1 million a kilogram, I mean, you can hide a lot of sins. Talking about sins, why are we mining a lot of these old dumps? It's the sins of the forefathers. So they've left us a legacy of a lot of gold, because those days grades on mines and even underground mines were very high.
So they didn't even bother about the lower grade, and they literally just disposed of it.
They
within
literally
the tailings.
dumped it. Gold control those days underground were bad, and so it ended up on the waste dumps and the slime dumps, and so we are recovering those today.
Yeah.
You know, when I was a miner, gold miner, those days we would talk about a pay limit of 5 or 6 grams a ton. So that's where your like break even is. People are mining 0.8 grams to 1 gram a ton and still making more money.
Yeah.
So, but gold is in my veins, and I always, on my road shows when I was a stockbroker, going through America, Canada, Europe, London, were trying to convince them to invest in South African gold mines.
Yeah.
That was my job. And they had to do it through the stockbroker, and so they became our clients, and we used to talk to fund managers. A lot of fund managers those days also were gold miners, had gold mining experience. Unlike today, you'll find fund managers were mostly CAs, and also those days was mostly men. Today, fortunately, it's very mixed bag that you're talking to. But they are very clinically looking at assets, profit and loss kind of thing. There's not this passion for gold is going to go up, and then you got to be in gold, and you got to be in gold shares, and that's what I tried to tell people those days. Rather be in shares, because the gearing effect is so much better than just being in physical gold. But that attitude have changed over the years, and I've become a bullion lover. I like physical gold. Unfortunately, people market gold in shares because of the gearing effect. And then exchange traded funds came on board, and hedging. There were so many instruments that came about. And all of them sort of fell by the wayside, became weaker. Interest change. We battled to try and people to invest more in gold. We had a rule of thumb, you've got to be 10% of your portfolio should be in gold. Today I feel 20% should be gold. Why? Because the uncertainty in the world. So if things goes wrong, I think it's better to have physical bullion in your possession, or at least in a safe. Not at my home. For those who's listening, I don't have any gold in my safe at home.
Well, this is also, we fully are mindful as a company of these kind of risks throughout the country and in fact around the world, and hence we have the relationships with Fidelity where, we utilize their vaulting facilities, which are world class, for our clients. And as far as collection and delivery, you utilize Skynet, which is ensured collection and delivery nationwide. And again, we negate some of those risks. But I'd like you just to go back to, gold, its performance. And as you said, initially you saw the benefit in the funds and that vehicle of gold. But as you've gone through your career and now to the latter part, you're starting to see massive value in the physical. Just unpack that and give us your thoughts as to why.
I also want to go back to those days when 1998, when gold, the rand was strong, gold was $200 an ounce, And I remember speaking to an audience at the Pretoria University, about 200 people. And I asked, I had a Kruger Rand with me, and I showed it to the audience. And lo and behold, nobody else had Kruger Rands. And I said to them, you should invest in physical gold. And a Kruger Rand is physical gold, but it's also currency.
Yeah.
And I explained to them about currency, gold currency. For me, there's only 6 currencies in the world, which is dollars and the pound and the Swiss franc and the euro, and then the Japanese yen that you can take seriously. Not even today, people are taking Chinese currency or any Eastern Asian currency seriously. So, and gold was number 6.
Yeah,
gold is money.
Yeah,
gold is gold bullion. You can trade with. You can buy stuff with it. From Bible times, you can do that. That has not changed. People actually have the wrong perception about, I don't have storage facilities. Where do I store gold? And I like to use that example. You can buy canisters at the pharmacy and get which contains tablets, and some of them is big enough that takes a gold coin. And there's one product on the market, and I don't want to advertise the product, but it takes 20 Kruger Rands. 20 Kruger Rands today is what's the number? Help me.
Sure. 20 Kruger Rands, you're looking at...
It's 700,000 Rand.
Yeah, absolutely.
700,000 Rand. So you can carry 700,000 Rand in your pocket, or, and you can hide it.
The one benefit also is it's global. So you could take those Kruger Rands with, of course, the SARS clearance as a South African, and you can go anywhere in the world, and you'd literally have a global price for your gold.
Well, absolutely. You
can literally, so it's geo-neutral, and this is one of the things that people also need to understand. Investing in physical gold into that vehicle allows you to literally firstly negate the losses, and you mentioned the rand, and I mentioned it in the opening, but that's also a big aspect, especially for local investors and international investors. We're living in a very uncertain world now, economically and geopolitically. The whole movement of BRICS, which we're currently going through right now, and the buy-in of a pile of new countries signing up to it, also opens up that the world's not getting safer through confidence. It's actually becoming more uncertain and more unsure. Economically, from COVID to now, we've seen how the world has literally had to drag itself out of that. The S&P 500 is a good barometer of that, and we can see that it is overinflated, and there is a definite market correction on the cards. What's your thoughts on that?
Gold is a store of value.
Yeah.
And it did, and I want to go back to the late 90s with the Asian crisis. It did exactly what it was supposed to do. Asian governments called on the public to bring whatever they owned in gold and bring it to banks, and so that they could sell it on and to get out of that crisis. The banks of Brazil, the banks of England in the late 90s were selling gold left, right, and center. And people say, why it's not popular anymore? No, those countries were in dire straits. They needed cash. And I mean, their reserve banks needed cash. Unfortunately, there was other countries that could supply the gold, and then there's countries that needed the gold. Now, and that market dynamics is still strong today. The East is buying gold, the West is selling gold.
Yeah.
I mean, China's buying gold left, right, and center. Russia's back in buying gold. India's still buying gold. So it mainly comes from the East, the buying, won't call it a spree, but that's what's balancing the books at the moment, why gold doesn't go beyond 2,000 and that why it doesn't go below $1,800 to the ounce. It's exactly doing what it's supposed to be. Physical gold is somewhere in a vault. It's a store of value. Banks sometimes needs money. They need to downsell. There's always a buyer for that product.
Yeah.
It's not like people don't believe in gold. As long as there's wars, we'll see this trading going on. If all the banks today stand back and hold the gold, then the gold price will go up. But unfortunately, a lot of the banks and a lot of the countries are basically bankrupt, if I can say that.
Well, you're talking about the debt to GDP ratios as far as the amount of debt they've incurred versus what they actually output. And it is a big problem. I mean, we look in the first world countries like the US and the UK, their ratio is over 100%. I think the UK is about 128% debt to GDP ratio. South Africa, being a mix of first and third world, we'd gone up around COVID to around about 88%. But for a developing country, that's exceptionally high, and we don't have that infrastructure to maintain that kind of that kind of ratio. Fortunately, it has pulled back a bit, but in the same light, our status with all the S&P and so on has actually been downgraded to junk status. We've incurred a grey listing, and I love to mention this is when the finance minister was asked, about the grey listing. He said he had spoken to the Mauritian finance minister, and the finance minister said there within, I think they got out of their grey listing within, I think it was about 18 months. And the finance minister here said, not a problem. This time next year we'll be out of it.
I'll drink to that.
Yes, and the concern here is, and I've always said this, is we as a company don't like to focus on the politics, but we like to take a clear look and understanding. And the biggest downfall right now is our national executive, the guys that are being voted in to run this country, can't even agree on the most basic things. Sure. And yet that is a problem. I mean, and we can see it filtering right down to municipality level where we got the load shedding, we've got all these things that the infrastructure is crumbling. Yeah. And at some stage, we need strong leadership. But this strong leadership thing is also a global problem. We see the US is in a problem where they don't have strong leadership. Same with the UK and various other countries around the world where we need strong leaders to carry us through these uncertain times. What's your thoughts on the whole BRICS nation, the BRICS bloc and how that is going to affect the world? I do foresee it's going to have an impact on gold. And what's your thoughts on that?
Well, at this stage, I'm not very clear because you get mixed messages from the feedback from BRICS. I'm not opposed to BRICS. I'm not opposed to them having more members. It's not my place to say what politicians decide and not to decide. I'm a mineral economist by background. I'm not a politician. However, that also creates uncertainty, the whole BRICS saga. However, the countries that's in BRICS are very pro-gold, which I like, which is the Asian countries, which is Russia, and now with Saudi Arabia and the UAE also starting to show a big interest in gold. So that will be to the benefit, I believe, of the gold market. In the Middle East and the East, individuals, households, they like to possess gold, even if it's just one coin. Each kid will have a coin. We don't have that philosophy or belief in the West where we give our kids gold coins and so on. And I think ultimately it will benefit us by a bigger BRICS, if I can call it that. It will make us stronger. But the main question I'm asking is, will BRICS come out with a currency? Will they have their own currency? Because they'll have to back it with only one thing they can, not with dollars. They'll have to back it with gold. That will be strong for gold if BRICS brings out a currency. But that it brings its own dynamics, competition to the dollar, which ultimately could end up in a war.
Yeah. Well, that's that uncertainty we're talking about. Your thoughts on the outlook for gold? I mean, you kind of outlaid that gold has a ceiling and a floor to it right now. So we're staying in that $1,800 to $2,000 band. Do you foresee that band's going to break higher into the $250 an ounce, and start to move towards that?
I believe gold will always go up. Will always be a demand for gold for various reasons, investments and uncertainty and war and so on. And why do I say that? Because I go back to, let's say, the year 2000, when gold was $250 an ounce. It's now 1,800. It did touch 2,000. So in dollar terms, it did go up. In 2000, it was 1,800 rand. Now it's 35,000 rand a kilo. So, yes, it's going to go up, not just because the rand's going to get weaker, because there's demand for gold.
Yeah.
There's demand because it's not coupled to oil like in the old days. It's not coupled really to the dollar. It's almost coupled to inflation in a way. Because investors, large investors, BlackRock Mining and those big funds, what do? They watch all these gold mines. They can, in a way, dictate where share prices go and where the gold price is going to go. They don't want gold mines to go bankrupt and close. They want them to stay in business. So they will always sort of beat inflation, and that's what's been happening. The gold price beats inflation since 25 years ago.
Yeah.
And that's why I say it's a better interest rate in dollar terms and in rand terms. And coupled with both of them, it's a double whammy.
Absolutely.
So, strictly speaking, you can't go wrong. So, yes, I believe the dollar gold price will go up. And I believe that the rand is going to be weaker in the next 3-5 years still.
Yeah.
So we're gonna go to 40,000 rand a kilo, then we're gonna 45,000 rand a kilo. And I believe you've got to be there. Don't buy it at that time. You know, you should. And I don't necessarily practice what I preach, because I should have bought everything that I had in 20 years ago. But we're asking you, put 10 to 20% of your portfolio in gold.
And you know, that is a fundamental almost shift that we're asking people to start reconsidering. Is yes, it's you need to be diverse in different things to negate losses in various things. And the important thing is, if you had everything into one thing, you're gambling. So as you said, maybe 20 years ago, if you would have put everything into gold. But who's to say through the shorter period you may have lost? Because there's been decades. I mean, the 80s and 90s were not flash decades for gold. They were very lateral decades, even though it was laterally moving up. You know, and then of course over the last 3-4 years, we've seen gold really storming, breaking the $1,600 an ounce, and then pushing up to over $2,000. The pullbacks that we've had, and of course traditionally the northern hemisphere summer is a typical period of time where gold does tend to subside a little bit because people are on holiday.
Right.
And so we're now moving towards that latter part where we're now heading towards the end of the year. You mentioned India. They are the biggest consumers of gold in the world. You mentioned the UAE. And what's interesting is you speak about culture, that every single child born in the UAE receives a gold coin as part of their birthright into that nation. And that's a kind of the ethos that we as a business are also looking at, saying, start to invest in these things. And as you mentioned, an ounce of gold right now in rand terms we're looking at about 36 to 38,000 rand. Realistically, not everyone has that available income. And this is also why we've looked at products to break it down to where you can literally purchase on small amounts, purchasing grams on a monthly basis. Yep. And it's about that long-term a generational wealth that we're really focusing on. That it's not about buying today and selling tomorrow. But if you had gone and bought 20 years ago at $200 or $300 an ounce, suddenly now, 20 years later, you're looking at close to $2,000 an ounce, and the rand is devalued over that same period of time. Just in the last 13 years, the rand has gone from 7 rand to the dollar to 19, 18 rand to the dollar. And if you look at any local RA within South Africa, the performance, and we did this, we actually did a case study on an RA, and in fact it was my personal RA with a highly reputable company in South Africa. And what's interesting is the performance has not really given great, hasn't been exceptional. In fact, when you convert it into dollars, it actually runs at a loss. Now, what we also then went and did, which was interesting, is we took the same premiums on a monthly basis, around 1,500 Rand to 1,600 Rand a month, and we applied that on every single month purchasing physical gold. We didn't just take the spot price of gold, we added a premium because it's a physical product, and we applied that. And what's interesting is the current value of my RA would sit around 207,000 Rand. If you'd purchase gold over that same period of time with the same premium, which is about 180,000 Rands worth of premiums, you'd be sitting at about 280,000 Rand. And that's just purchasing on a monthly basis.
Right. Now, that's what attracted me to DCX. I'm honored to be the chairman, but I believed in your vision and what you told me, and the vision is growing and expanding, because it's difficult for people to buy coins. It's difficult for people to own bullion. It's difficult to own a kilobar. I mean, our government didn't make it easy. I mean, there was laws and bylaws and whatever preventing you from that. But today, you've got go online and you can order coins or bullion, or in what form, medallions or Krugerrands for that matter. Absolutely. And that's what's so important. Make it available to the masses, because gold is not something that can or should be owned by the rich. It should be owned by everybody in the street. And therefore, if he only can afford 500 Rand a month, he must have a vehicle which he can invest in and ultimately turn that investment into bullion. And it's easy accessible. That's so important. It's not like, it's easier to sell gold today than 20 years ago or 10 years ago. Within 24 hours, you've got your money back. And one thing is, you don't wonder about it. You know your gold is in a bank vault. Yeah. If you want to, you can actually go and visit. That's people should know. I've got physical gold. If I want to look at it, I can go to the bank or to the institution where it's stored in a vault, safely, securely. If you've got a RA, a pension fund, or whatever, a policy, you can't go to Old Mutual and say, can I see my money? You just don't. It's somewhere in cyber. You can't touch it. So you're just hoping one day when you cash in, you're going to get your money out. But with physicals, it's very difficult. Different.
Yeah. So interesting about that is when I was sold my RA by a very well-versed man within that space, and he said, based on the performance, you'll get this and that. 13 years down the line, 14 years down the line, well, the rand hasn't performed that well, and so on. I mean, we see the JSE, we see the performance of the JSE and so on. And now suddenly the value that I was promised over all those years of putting money away has not come to the fore. Yeah. And the problem is, and this has left a gaping hole within our economy, that people want to be buying, ensuring their wealth over the long period, creating that nest egg. Yeah. Yet they haven't had those vehicles. And fortunately, there are a number of bullion businesses out there that do offer various programs. I'd like to believe that ours, based on the accumulation of grams on a monthly basis, is the key difference to what is being offered out there. And the important thing is, again, and you mentioned it, this is about that person that can afford 500 Rand a month, that they have got a vehicle that over 5, 10, 15, 20 years of investing can become substantial. Let's think about this. As you say, 20 years ago, the Rand to dollar was probably It was literally, what, 20 years ago? It would have been,
20 years ago, it was like 3 rand to the dollar.
yeah.
Yeah.
And then so around 2008, 2007, it was around 7 Rand odd, 7 Rand to the dollar. And we look where it is now. Then you look at gold 20 years ago where it was in value. So I remember you said it was around 200. I mean, I remember the year I matriculated, which was 94. Gold there was a rise in it. It was around $300 an ounce. And you look at it now, if you had said to me then that gold would go to $2,000 an ounce, nearly 20 years later, I would have said it's impossible.
Yeah.
And yet, if we had to also now take that same forecast saying, where will the rand be over the next 5-10 years? Is the economy built and structured in a way that is going to support the rand from being devalued or to grow and actually improve its value to the dollar? And the answer is no. No. We cannot even, we don't even know what's going to happen over the next 2 to 5 years.
No.
And that's a concern.
My concern is large institutions like Eskom and like Transnet, which drives our economy.
Yeah.
Big drivers of the economy. It's not fixed. It's not going to be fixed in the next couple of years. Therefore, our mining industry is not running at full capacity. We're running at probably 75% of capacity. We can do a lot more in this country. And not until that's fixed. And if we don't do better, the rand is going to get weaker.
Yeah.
For other investors, they're not looking at South Africa. On my travels overseas, I battled to get people interested in South Africa. Recently, a month ago, we're looking at assets in Africa. People say, show me what's in Zambia. Don't show me what's in South Africa,
And that's concerning.
And that is a big concern. But I want to come, just a point that I want to make, what's so important about precious metals, now and that's gold and platinum, is that the price of the metal is fixed every day. So you as an investor know exactly what's the value of your commodity in the safe, whether it's platinum or gold or silver.
Absolutely.
You know what the value is. Every day it's fixed in the London market. So there's no uncertainty. Whereas with shares can go very quickly up and down. It's because of the governments, because of the economy, because of bad management on mines, because of disasters. If your gold's in a safe, disaster is not going to affect it. Even if a storm's going to hit it, you're insured against it. So nothing's going to touch your physical gold. So that's why it's important to hold the physicals, but not carry around in your pockets on a daily basis.
No, I wouldn't be wise. But, the interesting point there is, what's your thoughts then? So as I was building up to, with gold, as we're saying, realistically, we don't know over the next 10 years where the price is. We know it's going to continue to be laterally upward in movement, but we could argue, for argument's sake, I mean, the most conservative projection, when we researched 2023 at the beginning of the year, we got from the COMEX, so the company that actually runs the COMEX, and they gave the most conservative projection of around $2,250 by the end of the decade as where gold will be. That doesn't take into consideration war, doesn't take into consideration any massive market correction, which if those two factors, say there is a massive market correction, and when I say that, it's either a major recession or depression. I mean, we could see gold shoot to over $3,000 an ounce overnight because of that, where you're going to have a lot of institutional investors moving their wealth straight into gold to protect it. As you said, the correlation or relationship between gold and inflation is quite interesting. And it's interesting that how inflation moves, gold either acts or reacts to it.
Absolutely. It will always beat inflation, I believe.
Yeah.
So if you've got an inflation forecast of 6%, it's going to beat that inflation. It will beat the American inflation. And that's what attracts a lot of investors, that it gives you better investment in gold than in America. What's the interest rate today in America? It's 3%. It's zero in Japan. So, I'll take 3% if I can only get zero in Japan. In South Africa, our inflation rate 6-7%, and that's up and down, up and down. So we are beating that hands down. So do I believe we're going to go see 2,000 shortly? Yes, I do. Do I believe we're going to see 40,000 Rand a kilo in the next 2 years? I do. Do I think it's going to double in the next 5 years from where we are now? We're talking 70,000 Rand a kilo. I will take it if it comes, but I'll be very happy if it only goes to 50,000 Rand a kilo, because it will still beat inflation, and and it will cover a lot of sins. I just hope we could mine more gold in this country.
Well, interesting. And, my background's also from a mining manufacturing background. And I remember being involved with a lot of the gold mines on the Witwatersrand, but all the way out to Welkom, your hometown. And also out to Klerksdorp. And I mean, there are a lot of big projects that have been mothballed,
right,
and put on literally on ice, and massive ore reserves that are waiting to be to be mined.
Right.
And at the end of the day, I think it comes down to firstly the depths they're working at and the costs involved with that. And it needs to be probably at a higher level before they'll even reconsider opening up those projects.
Well, you speak to some of the CEOs of some of the larger gold companies, like Harmony, for instance. Harmony is deepening one of their shafts, or in fact, two of their shafts, I think. They're positive of the future of gold price and technology, which will allow them to mine at deeper levels. There's a vast amount of gold still in South Africa locked up. Some people say as much as that we've been mining the last 100 years. But that is like beyond 4 kilometers, which is very deep. We are mining at that depth, at the Western Deep Levels mines now called Tautona and
Mponeng. In fact,
Mponeng, yeah.
Yes, in fact, I've actually been down to the bottom.
Right, and I worked at that mines. So technology will allow us, I believe, to keep on mining at deeper depths, and also allow us to still afford and make a margin. And that's why mines like Harmony is attacking those deep mines. And I really, look, there's no shallow deposits left in this country, or else we would have known them, or else we would have been mining them. So people are continuously looking for gold elsewhere. But it's fine. It's still gold. Even if it's global. It doesn't mean that the gold that you own comes from South Africa. It could be gold that has been produced in Brazil, for that matter. Yeah. As long as you've got that physical piece of gold in the form of a coin or medallion or whatever.
So what's also interesting is there's been massive trends within the physical bullion market. So typically your coin collectors or people buying your sovereign coins. So that would be British Britannias or Canadian maples or American eagles or koalas or pandas from China and so on. And the Krugerrand falls in that range of coins. You also get your medallions, which is another form of gold or bullion coins. And what we've actually seen is there's a definite move amongst a younger generation. And interesting enough, this came out especially with silver. Now, you will remember in the late 70s, early 80s, the Hunt brothers did the silver squeeze, which forced the silver price to shoot through the roof. A lot of people made a lot of money out of it, and then the silver price retracted. And interesting enough, this was done about 2.5 years ago, February, where the Reddit Wall Street bet groups were all trying to create a silver squeeze. And they forced the price of silver over $30 an ounce. Currently, it's around about $24 an ounce. But at that stage, we were looking at probably around $18, $19 an ounce. And the price spiked over $30 an ounce, and there's been a retrace. But what was interesting with that whole exercise is it opened up the bullion market, or especially physical bullion market, to a whole new generation of people. Your millennials, the people under 30 that are now looking at this saying, well, they can see that an RA does not make any sense any longer. It's a thing that is not adding value. So these are now things trend-wise that are coming into it. We know, as I'd mentioned, India, from a trend perspective, has been buying gold from a community or an individual perspective. Do you foresee that also is a market that will continue to grow?
I really wish it wants to grow. Not enough has been done in my lifetime about marketing gold.
Yeah.
There was marketing about shares, individual shares, listed shares in companies, but physical gold has never really been marketed well. Even the Kruger Rand, I think later years, almost like an attitude, everybody knows about the Kruger Rand. If they want it, they'll buy it. So we didn't see a lot of marketing, and even today, not enough marketing about Kruger. You won't see countries like America or Canada or Australia market their gold coins in this country. Why not? We can buy it.
Yeah.
You know, and I think that's important. And the younger generation, I think, is susceptible to new ideas, much more than the old. We grew up with fixed ideas. What is wealth? What is money? I think that has changed, and they're always looking for new opportunities. And I think with the right tools, with the right marketing, we can have a new investor base. And it's large, and it's getting larger. And I don't think it's driven by greed. It's driven by a better education globally of young people about investments, about the future. Provide for your family, provide for your kids. Where's the money going to come from? Where's my pension? Won't my pension be wiped out by some sort of form of disaster or whatever? If I'm in physicals, I'm much better protected. And I think the marketing of precious metals need to be increased globally, not just in South Africa.
And you know, personally, that's been my mission from a personal perspective and from a company perspective. As you say, there are international guys within this space that are promoting it. But again, I agree with you. I don't believe it's made aware enough that people do, you know, you have got options. There are choices that you can either put your head in the ground and say, oh, none of this is going to happen. And you can see your savings being eroded literally as the rand continues to devalue to the dollar. Or you can actually say, you know what, let's put some of that wealth into gold. I mean, another case study, and I always talk about this, is the whole Argentinian sovereign default. And you know the story. In January of 2020, the Argentinian peso to the dollar was 59 pesos to the dollar. They had a sovereign default in June of 2020. Guess where the peso is right now?
I wouldn't know.
349 pesos to the dollar.
Sure.
So we're talking about literally 2 years later.
Yeah.
No, 3 years later. Yeah. We're literally talking 3 years later that the peso has devalued that much. Yeah. Now, what is very interesting in that is if you had gone and invested 1 million pesos in gold in January of 2020, it would have bought you 11 ounces of gold. Currently, those 11 ounces of gold are worth over 7.4 million pesos.
Right. That's astonishing numbers. You're talking about wasting assets. Now, the peso is a wasting asset. The way the rand is going, it's almost like a wasting asset. So, but tongue in cheek, I said to somebody the other day, where's the money going to come from to buy your gold coins and so on? I said, well, you know what? Fortunately, today we've got Uber. Sell your car. A car is the biggest wasting asset you can ever buy. It's just going to cost you money for the rest of your life. You're going to have cars, you're going to waste money, and it's deteriorate. And the salesman's going to promise you you're going to get a good trade-in, which you're not going to get. However, it's guaranteed that when you sell your gold coin in 10 years' time or 5 years' time, or you trade it in, it's going to be higher than what it was when you bought it.
Yeah.
So sell your cars and buy coins.
So interesting on that point. So that same 1 million pesos now, with the exchange rate of 349 pesos to the dollar, 1,000,000 pesos will buy you 1.47 ounces of gold
Ridiculous.
versus 11.03 ounces.
Right.
So, and that's over a short period of time.
Yeah, exactly.
You know, so we're not talking, a long period. And this is also where, especially as you mentioned it earlier, South Africans or people within this region, there's a double benefit to looking at physical gold. The devaluation of the rand to dollar, the growth of gold in its own right. That double whammy where you're wanting to preserve wealth over the longer period makes absolute sense.
So we've got to go get out there, tell the youngsters, and I believe we should start at school level marketing gold, not wait for them to earn a salary one day. They must be aware, even before they go to varsity, that there's a potential of investment. 500 Rand a shot every month. It's not a lot to ask for. I mean, you go to the movies and you had a meal, 500 Rand is gone today. Maybe better invested in by a monthly medallion club.
Absolutely. So in closing, Gerard, I mean, firstly, thank you for your time again. I really do appreciate it. And it's exciting we're starting these podcasts. This is the first official DCX podcast and interview. Just your thoughts in closing, you know, if there's someone that's sitting and listening to this, so I'll position two profiles for you. In their mid 30s to probably early 50s, that bracket of person, and then someone, like you said, that is out of school, studied, and now in their first job. The first one. So let's talk to that first person that is in the mid 30s to early 50s. What message from your years of experience being in this? I mean, you were ranked at one stage as one of the top gold analysts globally for a number of years. So, you know, your information, your understanding of this is not just a thumbsuck. You've got a lot of credibility behind that.
Well, start investing in gold now. Don't put it off, because tomorrow might be too late. People always thought, but I need a lot of money to invest in gold. That perception is still out there. They need to know that with like 500 Rand, they can still start participating. You know, they won't put 500 Rand in the bank to save. But if they know that they might be able to buy physical gold or platinum for that matter, I think that attraction would be there. So market now gold every month. You don't have to buy a coin. You don't have to buy a gold bar. I think when people see gold, they see gold bars. Oh, I can never afford to buy a gold bar. That's not what we ask people to invest in. We just say, be conservative. Things will go wrong. And invest in gold. So maybe in 10 years' time, you want to buy that house for your family. Then you've got a gold investment that you can go to. In 20 years' time, you've got kids. Maybe you want to, but, you know, it can pay for your kids' university fees or whatever. But don't wait until you think you've got enough to buy a gold bar. That's a big mistake.
Gerard, it has been really an honor, and thank you for your time. I do sincerely appreciate it.
I really enjoyed that, and thanks, and I wish you well.
Thanks, Gerard.
Thanks, man.